if you look at the LBMA, for the last 11 consecutive months, there have been outflows from the vaults, and this is unprecedented.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And a little bit of a difference for Rafi's weekly Friday show. Being Thanksgiving week, we decided to give Rafi a well-earned break off. Although, fortunately, we have his panel where Rafi, along with Ronan Manly, were at SilverFest just about a week and a half ago. And they talked about where all the metal is going, all of the outflows that we've seen from the COMEX and the LBMA. So it's great to have both of these legends together for a discussion. And that one is coming your way now.
One of my panels that I've been most excited and looking forward to. Two of the most brilliant minds in the industry. We have Ronan Manly of Bullion, who does some great research, has been all over these inventories that we've seen falling in the silver market, both in London and on the COMEX. So along with Ronan is Rafi Farber, who is a hit celebrity sensation, the Friday show on the Arcadia Economics channel, as well as at the Endgame Investor, where he writes on Seeking Alpha, also has a fantastic YouTube channel of his own, just under Rafi Farber. So, gentlemen, welcome on in here. It's great to see both of you. And how are you doing today?
Very good, thanks.
Thanks, Chris, for having us, and looking forward to speaking to the audience.
Well, I know there's a lot of people who have been calling for both of you already. So with that said, we will dig right in. And obviously the theme of this panel is, why does the silver keep leaving the COMEX and the LBMA vaults? And Ronan, since you were really the first one to touch on the LBMA vaults and as well as the COMEX, but why don't we start with you, and you can share your thoughts on what you've been seeing and what you found in your research.
Okay, hello everyone, and good afternoon or morning or evening, wherever you are in the world. And yeah, as Chris said, the theme of this topic is the huge, unprecedented draining of physical silver out of the vaults of LBMA in London and the COMEX in New York. And it is indeed unprecedented, because I think it'd be good if I start off just giving you an overview of the numbers of the amount of physical silver that's literally leaving. If you look at the LBMA, for the last 11 consecutive months, there have been outflows from the vaults, and this is unprecedented. The data for LBMA began to be published in July 2016, so there's just over 6 years of data at this stage. And for the first 5 years, literally from July 2016 up until around June 2021, there were net inflows of silver, not every month, but the trend was an overall inflow. And there was about 230 million ounces, 7,200 tons added over that 5-year period. But then beginning in July 2021, in the 13 months between July 2021 and June 2022, the vaults lost all of that 5 years of stocking. So there was a literally destocking of 230 million ounces, another 7,200 tons. And it didn't stop there, because in August and September and October last month, there was an additional 100 million ounces left the vaults again. So that was like another 3,000 tons. So overall, from the peak, which was about mid-year last year up until last month, a few days ago, literally, when they announced the results, the number, there's been about 10,200 tons of silver have left the LBMA vaults. And this is unprecedented. And even the LBMA in their conference in Lisbon in October had this as one of their big topics, and they were using words like unprecedented and huge demand. And if you flip over and look at COMEX, it's a similar situation, a bit smaller, because literally for the last few months, the amount of silver that's been leaving the LBMA vaults each month, 35 or 40 million ounces, is more than the actual amount that's left now in registered category in COMEX. So if you look at okay, Chris has this really good slide. This is from Nick Lard of Gold Charts or Us. So if you look at that peak in early 2021, February 2021, when the COMEX vaults had about, what's that? Is that 400 million ounces? I think, and the
50 in registered and about 400 in total warehouse.
In total, yeah. So beginning in February 2001 or 2021, the registered category of COMEX had 150 million ounces, as Chris just said, and now it has 35 million. So that's a drawdown of 115. The eligible in the light green, you can see, has sort of been going up all the time, but now that's turned itself. So the eligible over the last few months since July has seen a net outflow of around 15, 20 million ounces. So literally you can see that the trend in New York is the same as the one in London. But the difference here is that registered category silver is literally by definition those silver bars which have a warrant attached and which the owners have said are available for trading, whereas eligible is just literally silver that meets the standard of good delivery of a silver bar, variable weight bar, more or less 1,000 ounces. But this could be anything. This could be people that just have silver held in CNT depository or one of the Delaware depositories, or have it with HSBC or JP Morgan in New York, or have it with the carriers like Brics and Lomas and Malcolm Mitt. So eligible really, we'll talk about that a bit later, but eligible is not necessarily anything to do with COMEX. So you can see there that if you add together the amount of silver that's left London and the amount of silver that's left New York in the last year and a half together, that's about 14,000 tons. And that's a huge amount of silver. So obviously the global supply, which is about 1 billion ounces, or you can call it 33,000 tons a year, that isn't really doing its job of providing enough supply for all the global demand. So it seems obvious that they've had to eat into their stocks, which had been built up over the last 5 years, and there's destocking, because otherwise, why would all this silver be leaving the vaults if it wasn't needed to meet extra demand? So I think that the Silver Institute 2022 figures of projected demand and supply are a little bit off, because, or maybe a lot off, because they're not taking into account the fact that there's been huge drawdowns from these inventories. So you could say that maybe global supply is 33,000 tons, but global demand could be 45,000 tons. And that's what this difference between supply and demand is showing in the vaults. So that really begs the question of what kind of demand is there? And there seems to be huge demand firing on all cylinders, both industrial and investment demand. And there's been a lot of talk about India as being one of the big drivers of demand, and that's totally true. So it's as if India has reawakened after its sort of COVID slumber and is at the margin, creating huge extra demand and competing with all the existing demand sources. So if you look at Indian import statistics, because India doesn't have a lot of silver mines, so it imports a lot of silver. But this year they've imported so far in 10 months about 9,000 or 9,100 tons of silver. For example, in the last few months, in October, India had net imports of 900 tons. In September, 1,700 tons. I think in August around 1,000, and in July about 1,600. So it's huge. Even if there's like 800-900 tons per month in the next 2 months, November and December, that will bring it up to like nearly 11,000 tons, which is 1/3 of global silver supply. But apart from India, there's huge demand in like traditional investment silver markets like Germany and in the US, and there's a lot of silver flowing into Turkey and the Middle East, because it seems as if, although US investors would probably not look at this on a daily basis, but the price of gold has been going up in a lot of currencies apart from the US dollar. So people who live in these countries and in emerging markets, for them gold is becoming more expensive. So there seems to be a shift to buying silver, as example in Turkey and in India. So people are buying in a relative sense something that is more affordable, and I think that's driving some of the investment demand in these countries. But in places like Germany and US, it's to do with purchasing, wealth preservation and retaining their purchasing power. And then, as you all guys know, and everyone listening, everything in the industrial world is firing on all cylinders, like electronics, electrical, photovoltaic, photography, alloys, solders, whatever. So there's a huge amount of competition for available physical silver.
Yeah, it certainly has been pretty stunning to see how much metal is coming out, and especially since it happened, at least on the COMEX, right around the silver squeeze. LBMA was a couple months after that. But Rafi, do you have any thoughts on any of what Ronan just mentioned and some of these big drawdowns we've seen?
I focus on the monetary philosophical aspect of these markets. I mean, I understand investment demand, I understand industrial demand, but monetary demand is a completely different thing, which we haven't seen yet. I bifurcate between investment demand and monetary demand, because investment demand is what silver stackers do. It's like we stack silver. Why? Because we know that something big is going to happen. And whether we realize it or not, what that big thing is that an explosion of actual monetary demand. And what is monetary demand versus investment demand? Investment demand is when you stack silver in anticipation of monetary demand, because you expect the monetary system to break down. And monetary demand is different from industrial demand because everyone demands money. Everyone needs money for something. Otherwise, there is no division of labor. So that's a much more fundamental thing. And when we look at the futures markets of silver priced, whether it's on the LBMA or the COMEX or whatever the contract is, I mean, what's the price of what we're looking at? We're looking at the price of industrial demand and some investment demand, but we're not looking at the price of monetary demand, because monetary demand is when everybody wants it to exchange against other goods. And when that happens, that's when gold to silver falls to like 15 to 1. As it does in every monetary panic in history. That's what always happens. Why? Because most people can't afford gold, so they go to silver, which Ronan already mentioned is already starting to happen. And when you see the gold to silver ratio fall like that, I think it fell below 80. I think it's at like 77 now or something like that, but it has a lot more to fall. It fell to 15 to 1 in 1918. It fell to 15 to 1 in 1980. It's going to fall to 15 to 1 again, and that's when we are in a full-blown monetary crisis. And when it comes to the COMEX and the LBMA, I'd say what is draining out? I don't know exactly. I don't think anyone can know exactly what is draining it out. But if you look at the premiums on the coin markets, which is investment demand, which is people who expect monetary demand to explode again, but it hasn't yet. The premiums there are like 30-40%. And you can get bars of silver for much cheaper than that. So it just makes sense to buy the bars, deliver them on COMEX or LBMA, and ship them to the bullion markets. That's how you would make money. I mean, you just follow the money. There's something that complicated. So it goes where the premiums are. It's going into the physical markets. That's what's happening. So hopefully, what I'm looking at specifically now is if the spot price is recovering and silver is getting more expensive on the futures markets, is the stocks of metal on the COMEX and LBMA, are they going to go back up because the arbitrageurs are reversing flows, or are the physical stackers going to continue to buy even though the price is going higher and the premiums are going to stay high, so the silver keeps flowing out? That's what we want to see. We want to see those registered supplies go to zero, and then what happens? That's going to be the explosion, or one of the signs of it.
Yeah, and Ronan, do you see metal coming back on? Obviously, we've had a rally, interesting, about $3.50 since October 14th. So a significant move up in just under a month. Yet, do you see these trends reversing at all anytime soon? Or is it just that the growing demand for silver, whether industrial or investment, and you can share your thoughts if you have any views of how much we're seeing of each, whether we're starting to get, I think we're getting some degree of investment demand, taking some of this metal off. What percentage, I guess, is to be determined. But do you see this trend changing as the price goes up a little bit?
Well, That's kind of a complicated but interesting question, because anecdotally you can see that in the London market anyway, because the premiums are very high in India, instead of shipping the metal to India from London and from the warehouses outside London, that they've been flying it over, because the premiums are so high that they can absorb the cost of air travel for shipping it by air across to India. And if you look at the Indian customs statistics, and Metals Focus have some good charts about this, so only about 55-60% of imports into India are coming from London. The other big sources are coming from Hong Kong, China, Germany, and Switzerland. So there's flows going into India from all of those places. And likewise, so if, for example, there's 1,400 tons leaves the London vaults in a given month, maybe half of that goes to India, but the other half is going to other places like US, Canada, and into Switzerland, and maybe for further processing. So I don't think it's easy enough to see if flows can reverse that quickly, because there's a lot of complicated routes happening. And the London figure, as much as people criticize COMEX and the reports, they're actually very transparent compared to what London offers, because London offers literally nothing. They offer one figure 5 business days after the end of the month. There's no concept of breaking it down by vault provider. There's no concept of withdrawals or receipts, or it's just a net flow figure. And there's no concept of registered or eligible. But I think that it's getting critical, and that there won't really be inflows coming back in again because of the sheer physical demand, industrial and investment, and as Rafi mentions, morphing into monetary. Because if you look at the figure of what's in the London vaults right now, there's 26,500 tons, but at least 17,800 tons of that is taken up by ETFs, ETF holdings. If you look over on COMEX, so you got the registered of about 35 million, but that document that I highlighted about a month ago, that was written by the CFTC back in February 2001, they were actually saying it was written by the CME and it was addressed to the CFTC. CME are saying that they don't really know how much eligible is part of deliverable supply. So they're saying conservatively to take away 50%. So at least 50% of eligible isn't actually available at the current time. And within that, or maybe apart from that, there is a holding of SLV silver in the JP Morgan vault in New York. There's 103 million ounces, which is around 3,600 tons. And that is in the JP Morgan vault, and that isn't available as eligible supply. So the liquidity of both LBMA and COMEX is a lot less than it looks at first glance. And I think that given that that profile, that it's going to be a case of something similar is going to happen quite soon, like happened back in February, March 2021, where the ETFs were warning their unit holders that there could be a problem with availability of silver.
Yeah, I guess that was my next question.
Oh.
When do you think this becomes a problem?
Well, if you see if you take away all the ETF silver from the LBMA total, looking at, based on my calculations, there's only about like 7,000 or 8,000 tons left in London. But Nikki Scheel, who is a precious metals analyst who has worked for the big banks and now she works for MKS PAMP, on Twitter, she even has a higher estimate of what's held by ETFs in London. She says that out of the 850 million ounces in London, 750 million of that is in ETFs. So that only leaves 100 million in London. She doesn't take account of the haircut of the CME's recommendation, but she still adds up what's in COMEX and the 100 million in London. And she mentions the Shanghai Futures Exchange, which has about, I think it's like 1,500 tons, and overall there's only 400 million ounces that is not spoken for. So it is quite critical, because like what's going to India in some months, if that continues for 2 or 3 months, that just eats through everything that's in London and New York. And that's only India. So obviously there's a lot of metal coming in and out of London, and it doesn't show up in that figure because they don't break it down. It's not transparent. But whatever's coming in is less than what's going out.
Yeah, and Rafi, I know that you've been expecting this to continue declining. Where do you see this becoming a bit of an issue where you start to have an imbalance?
I think we already have an imbalance, but what I keep saying to my guys is that look, everyone sees prices going up everywhere in the world. It's not a goods problem; it's a money problem. It's a money problem because we see basic necessities going up faster than any other prices. So everyone's focused on the broad inflation numbers. They don't matter. They do not matter, because in any hyperinflationary economy, you have basic necessities going up really, really fast, and luxury items either not going up at all or going up much slower than basic necessities. So when in this kind of environment, and we're seeing like already the developings of a financial crisis already coming into fruition. We're seeing like what is it? The tide comes in and you realize who's naked. So the tide's starting to come in, and the people on the edges are, they're already naked, whether it's the UK pension plans or FTX, some kind of crypto exchange, and some guy with a big afro comes up and he's a billionaire and nobody's ever heard of him, and all of a sudden he's bankrupt and he lost $40 billion or whatever. I mean, these things are going to start happening week in, week out now, and faster. And eventually the central banks are going to have to reverse. And when they reverse in the environment of inflation, whether it's 8%, 7%, 6%, 5%, I mean, they're going to reverse, and then everyone's going to attack the precious metals, because that's what humans do. That's what's going to happen. Exactly when the central banks break and start printing again, I don't know, but they're going to, because there's going to be humongous pressure to do so. So when that happens, I think silver gets drained from all the centralized stockpiles, COMEX, LBMA, whatever silver fund happens to be holding silver unallocated in the Perth Mint or Switzerland or whatever. It's all the same stuff. It's just different piles. So they're all going to be attacked at the same time, and you can use any of them as a proxy for any of the other ones.
Go ahead, Ronan.
Yeah, I've got a pet theory. I don't know how true it is, but it's just a feeling, like an instinct, that the bullion banks know that they sort of have access to the ETF funds in London, the ETF stockpiles. So what they could be doing is raiding the ETFs to take out physical silver. So they scare the market into selling. So weak holders. So they knock the price of silver down on COMEX in London. The price goes down, unit holders panic, and they want to sell their units. And then that gives the bullion banks access to more of the ETF silver that they exchange their units for. So I think they can use that buffer to raid the ETFs. They can do that until they can't anymore, until someone realizes in the market that takes the opposite side and stops them doing that. Or else, if silver investors as a group start buying into like Wisdom Tree, Aberdeen, SLV, all of those ETFs, and then those ETFs will have to go and find silver, and that's going to cause a difficult situation due to the lack of availability.
Okay, let me just go in here. This is just I agree with what you're saying in terms of the mechanics of it. I think that is what they're doing. We have to recognize this is nothing new or special. It's just a modern twist on what they always do when they're running low on metal. I mean, the Treasury did this in the 1970s with gold. They had big gold sales in the late 60s, early 70s, around when the gold pool was failing. Whenever they try to control the price of something, they dump it on the market. So it just happens to be that ETFs are the vehicle that are available for doing that these days, because there happens to be a lot of them, whereas in the 60s and 70s they didn't exist, so they had to use other stockpiles. But this is just a modern iteration of what has been going on for centuries. whether it's coin clipping or selling stocks or whatever. It just happens to be through the vehicle of ETFs now, which are popular. So it's the same game over and over again. When they run out, and we win because we're stacking and we're not selling.
And that leads to a question I think a lot of people are wondering about. What do you think it actually happens if the COMEX, let's say that number keeps going down, if it gets to 10 or 5, or should the rest of it leave the registered pile? What would you think actually plays out in that situation?
Well, at the end of the day, if the price rises to reflect the deficit of supply, then more people that are holding might be willing to part with their metal. So the price could resolve this shortage. But in another way, like in Bullion Star, we're always looking at the difference between physical and paper and what would happen in terms of when there was no confidence left in the paper market. So the paper price would go to zero and the physical price would not trade. That people wouldn't want to be trading until a physical price emerges a lot higher.
I mean, do you think we see some sort of rule changes, though, if that happens, similar to what we saw back in 1980, where there was just a jiggering of how the thing was set up? And do you think that would actually happen, though?
Well, isn't it true that these contracts, COMEX physically settlable contracts, can be cash settled in event of some sort of force majeure? Mm-hmm. Back in, I think it was 2020, August, the COMEX harmonized their approved brand lists by literally including everything that was on the LBMA current good delivery list and the former good delivery list. And I thought at the time they might be doing that in anticipation of times of shortages, where they can increase the available pool of metal by increasing the amount of brands that are eligible, including like old former brands and stuff like that. Because why would they have just suddenly made everything eligible? One thing that could be working against them in that regard would be all the Russian brands, which are now not eligible, but anything made before the 7th of March this year is. But we don't know how much Russian metal is in the COMEX warehouses, but nobody really would want to touch that, especially in the States. So that would trade at a discount. In London, I think that's the case, that traders are saying that Russian bars are not as, nobody wants to buy them because they don't want the hassle of having to prove when they were made and things.
Okay, and Rafi, what would you imagine we see if that number continues to go down?
Well, we saw it once in July of 2020 when I think the number of deliveries was higher than the amount of registered silver available. And so I think JP Morgan rushed, it was 45 million ounces from its eligible pile into the registered. I don't know exactly why they did that, because I think delivery was going into the COMEX, not out at that time, but it was at least on net. So it was confusing what was happening, but at least we see the mechanism of what would happen if registered supplies go to zero. You'd see some bank or other with a whole bunch of eligible supplies put them into registered category, because it's happened before. But again, we have to put 1980 into context here. The rule changes in the COMEX in 1980, they did them because they could. The situation there was we were already basically back on a gold and silver standard in 1980, at least in terms of the Fed's balance sheet, because the valuation of gold at the time was enough to back all of the Fed's liabilities on its balance sheet by over 100% briefly. And that is the definition of a gold standard. And the gold silver ratio is about 15-1, which is the general gold silver standard that we've had for hundreds of years before that. So 1980 brought us back on a gold and silver standard. So since we were already there, the COMEX had the ability to mess around with the rules. But if they do that in this environment where the Fed has absolutely no ability to raise interest rates anywhere near 20%, forget it, it's impossible. If they change the rules in this environment, then all the demand would just flood into the physical markets, and everyone would just ignore the COMEX, and who cares what they say? It doesn't matter. They won't have the power, because instead of dollars trading for paper silver on a futures exchange, you'd just have that futures exchange ignored completely, and physical silver would be exchanged for goods on some kind of decentralized panic, the segmented market where people would be trading physical coins or some kind of reliable backing of a certificate for them for actual goods and services, which would be the end game that we're all looking at, where gold and silver become money again, literally.
Yeah, and one other thing that perhaps fits into that equation that I'd be curious to hear both of you talk about. We heard the launch of the Moscow World Standard. So, and Ronan, in that article you wrote, I found it interesting how, again, these were 3 Russian media sources, not actually the Russian government, but they all used the word destroy the LBMA monopoly pricing. Do you think that's going to have much of an impact? And do you believe that the way it was phrased in those articles is actually in line with what the Russian government is thinking in terms of setting that exchange up? Do you think that will have an impact in the pricing going forward?
Well, I think that it was something that was always in the plans, but it maybe came to fruition, or maybe it came public knowledge a bit earlier because the LBMA and the US government put sanctions on Russian refineries and so forth. Because the way I discovered that was I saw some source about it in English media, but there was not much going on, much information. So I went and looked at Russian media sources, and I had to translate them from Russian to English using Google Translate and Yandex. And I realized there was quite a lot of those sources. So I sort of cross-referenced them and then came up with the information that this proposition about a Moscow gold, like a world gold standard and a Moscow gold exchange, was proposed by a Russian economist who used to be in the Duma, and he's quite well known in Russia. His name is Sergei Glazyev, I think, and he's the Minister for Integration and Economic Development for the Eurasian Economic Commission, which is the body that runs the Eurasian Economic Union. So I think it's a Russian proposal, but it was put out through the Eurasian Economic Community, which is 6 countries, including like Kazakhstan, Belarus. And this guy, is it Sergei Glazyev? Well, for quite a few years, he's had this vision that he wants to create a commodity-backed currency. So a currency that's backed by not only gold and silver, but by other commodities, metals, and even agriculturals and even water, it was suggested. So this is something that I don't know whether we'll get off the ground. I don't know whether it was just done as a way of putting up some sort of alternative plan in the face of sanctions. But it has the backing of the SCO, the Shanghai Cooperation Organization, and the Brics, because they're all involved in, there's a lot of crossovers in the economic work of the European or the Eurasian Economic Community, SCO, and Brics. So with all of these countries on board, and if they're all willing to go ahead with it, it's a very powerful set of forces. But I haven't seen anything about it since that initial publicity back in around May and June.
Yeah, and it's certainly been an interesting year in that section of the world where we saw the temporary gold backing to the ruble. And Rafi, any thoughts along with that, in addition to how we've heard stories come out, not official reports perhaps, but of the Brics looking towards a currency backed by a basket of commodities? Anything you'd like to add on either of those?
Yeah, I don't think we've never seen in the history of the world a currency backed by a basket of commodities. That's like it's a nice, people try to spin these intellectual theories on money that we've never seen before, and I don't think are possible. Look, gold and silver are money. Baskets of commodities are not money. Every time that some country comes up with some kind of scheme to use, whether it's real estate or tobacco or whatever as money, it doesn't last long. It's not going to last long this time. Gold and silver are money, and that's it. And as for Russia and the the formation of BRICS into some kind of a new currency, it would have to be gold and silver backed in order to supplant the dollar, which is what they're going to have to do. But if they do that, they're going to have to become fiscally responsible, which Russia does. Russia has the ability to do that. Brazil and India, I don't see any fiscal responsibility in those countries so much. Maybe they can change, but no, I don't see a changing of the guard by BRICS countries uniting and becoming responsible and changing the world. I see the market going one way, and then BRICS following the market by inertia and force, and then taking credit for it. So the public is going to lead the market. The public in the streets, the people trying to buy food in whatever city they are in the world. When it comes down to it, they're backed by the dollar right now. So when that falls, they're going to have to go to gold and silver. And then the BRICS will say, okay, we're going to gold and silver because that's where the market's going. And they have no choice. They're not going to create a market. They're going to follow the public and then take credit for it.
Well, it's certainly going to be interesting to see how this all plays out. And perhaps the last one before we wrap up, or Ronan, did you have something you wanted to say there?
No. I was just thinking about what Rafi had been saying. It was very stimulating. I was imagining the vision he portrayed there.
Yeah. Well, the last one for you. Do you think that 2023 we finally see some more overt divergence between paper and physical, or finally an escalation in the paper price, or some of the events that many who've been invested in silver have been invested for? Do you think 2023 we actually see a little bit more of that?
Well, is that for me or Rafi, or both?
I'll give you both a crack on that, but why don't you go first, Ronan?
Okay, well, no, I'd like to see it, but I've seen a lot of false starts over the years, in the last 10 years that I've been looking at this area. And it's just that the politicians, both in the central bankers backing the politicians in Europe and the States, and especially in Washington, D.C. with the CFTC, they're really like doing anything they can to prevent a free market. And you got like Gensler had been involved there, and now he's at the SEC, and you got Royston, your friend Benham. So and they've gone on record like they just want to make sure that the price of gold and silver doesn't flare up. So and you can see what's going on with FTX. There's even theories that FTX was like a psyop, so just to torpedo the crypto industry. So I wouldn't put anything past the government and their sheer obsession with not letting the markets be free.
Okay. Rafi?
How would I answer that question? Do I see it happening this year? Look, in terms of timing questions, this is what I always say. Like, be prepared for it to happen this year. Have enough gold and silver wherever you need it to survive the immediate aftermath of a dollar collapse. It could happen any time. It could definitely happen this year. Is it definitely going to happen this year? Nothing is definite. And there have been a lot of people in this industry a lot longer than I have been, who've been in it for 30, 40 years and haven't seen the collapse that we've all been looking at, all been waiting for. But that said, look, all inflationary systems are exponential, all of them. And they all head in one direction, only one direction. They just go up and up and up until they go vertical. And we're on the vertical stick of that. I mean, they could theoretically stop and then just watch the pyramid fall and watch all their banker friends just go bankrupt. It's theoretically possible they would do that. They're too greedy and stupid to do that. They're not going to do that. When you're up against evil, you can just be sure that evil is going to continue until its logical conclusion, which is self-annihilation. Any kind of evil does that. So that's what's going to happen here. And right now, the Fed is trying to come off the exponential curve by stopping the printing, and we see the money supply falling. That's going to last until it doesn't anymore. Every time that's happened, they've had to reverse. Is it going to change this time? Is it going to be the first time in history that the Fed doesn't have to reverse after stopping printing? No, it's not going to be the first time in history. Everything that's happened before is going to happen again, just on supercharge. And we're just waiting for that turn. And exactly when it's going to happen, we don't know, but it's going to happen soon.
Well, I sure appreciate both of you shedding some insight on that, as well as the other great research you do and in general and all the topics that you cover. I know people count on both of you to understand what's going on in a lot of these markets. So thank you both for joining me here. Ronan Manly of Bullion Star. It's great to catch up with you as always. So thank you for tuning in.
Thank you.
And Rafi, it's a pleasure to have you as always. Of the Endgame Investor. And one thing I would like to add before we wrap up this panel is also thank Kuya Silver, one of the sponsors who has helped make SilverFest possible. And fortunately, Rafi, I believe you're heading over to the Kuya Silver booth right now. And if people would like to talk with Rafi and ask some questions, you can also meet David Stein in there who runs Kuya Silver, and they'll both be heading over there. You just click on that Expo button to your left, then hop on into the Kuya booth, and you can meet Rafi. And that said, we'll wrap up for now. We'll be back in just under 10 minutes with Bob Coleman and Vince Lancy. So thanks again for tuning in. I hope everyone at home is having fun, and we'll see you in a little bit.
Well, thank you to both Rafi and Ronan. Sure was great to have them together at the same panel at SilverFest and shed some light on what's been happening with the silver that's been moving around and where things may be headed from here. So I hope you found that one helpful. And before we wrap up, would like to thank Kuya Silver for bringing us today's show. Kuya Silver has been moving its Bethania project into production down in Peru. And recently, as they've been continuing their exploration efforts, they had positive results from a sampling program they began back in October, where they have discovered 15 new veins, 9 veins at the Carmelitas main area, and 6 veins approximately 1.2 kilometers north of that area. Samples included up to 1,315 grams per ton silver, 3.6 grams per ton gold, and 8.4% lead, as well as 7.7% zinc. So it's great to see that in addition to the Bethania deposit, that the exploration plans are going well. You can find out more about that by clicking on the link to the press release below. Or you can just click on the video where I talked with David Stein about these latest results, which is coming your way now.